When it comes to investing in high growth potential funds, the question is, should you go with the Fidelity Global Technology Fund or the Fidelity Blue Chip Growth Fund? Both funds have their strengths, but which one aligns best with your financial goals? Let's dive into their performance, strategies, and fees to help you decide. The Fidelity Global Technology Fund has been one of the top performers in the sector equity technology category. As of September 27, 2024, the fund was priced at $60.48 per share, up by 0.37% from the previous trading day. This fund has provided a staggering 37.02% return over the past year, reflecting the explosive growth in the technology sector. But it's important to consider its cost. This fund has an ongoing charge of 1.88% and an initial charge of 5.25%. While these fees are higher than average, the fund's performance has often justified the cost of investors seeking strong exposure to tech. The Global Technology Fund is primarily invested in large cap growth stocks, with 67.41% of its holdings concentrated in the technology sector. Some of its top positions include Taiwan Semiconductor Manufacturing, up by 82.98% in the past year, Microsoft by 36.84%, Apple up 33.66%, Amazon up by 49.21%, and Alphabet by 25.59%. Together, these top 5 holdings make up 24.17% of the fund's portfolio, which means a large portion of your investment is dependent on the performance of these major tech players. The fund has a total asset size of £18.4 billion, making it a substantial player in the global tech investment landscape. But how does the Fidelity Blue Chip Growth Fund compare? As of September 27, 2024, the fund is priced at $209.21, reflecting a year-to-date return of 27.55%. Over the past year, this fund has returned 35.12%, demonstrating its solid track record in large cap growth stocks. The Blue Chip Growth Fund is a part of the large growth category and focuses on investing in well-established companies with significant market capitalization that show strong growth potential. It has a turnover rate of 22%, indicating moderate trading activity compared to the Global Technology Fund. What's more, the Blue Chip Growth Fund charges a much lower expense ratio of 0.47%, making it more cost-effective for long-term investors. Over the past 5 years, this fund has delivered an average annual return of 21.51% compared to 17.18% over the past 10 years, showcasing its consistency in growth. While it may not be as focused on technology as the Global Technology Fund, it offers a well-rounded approach by investing in sectors like information technology, consumer cyclical, and communication services, providing a bit more diversification. So, which fund is better for you? If you are a tech enthusiast, the Fidelity Global Technology Fund offers concentrated exposure to fast-growing technology companies. However, with an expense ratio of 1.88%, you will need to be comfortable with higher fees. Its top holdings like Microsoft, Apple, and Taiwan Semiconductor have delivered strong returns, but this also means your investment is heavily reliant on the tech sector's continued success. Additionally, 57.92% of the fund's assets are invested in US companies, with the rest spread across Asia, Eurozone, and emerging markets, adding some international diversification. On the other hand, the Fidelity Blue Chip Growth Fund is a great choice for investors looking for growth beyond just technology. It invests in large, well-known companies with top holdings like Nvidia 13.44%, Apple 11.84%, and Microsoft 8.19%. With a lower expense ratio of 0.47%, it's a cost-effective way to tap into growth across multiple sectors. Over the past 3 years, this fund has posted a 6.91% average annual return, reflecting its ability to navigate volatile markets. The Global Technology Fund has 95.32% of its holdings in non-UK stocks, with a large concentration in the United States, but also significant exposures to Asia and Europe. By comparison, the Blue Chip Growth Fund has 95.54% of its assets in US stocks, making it more focused on American companies. The Blue Chip Growth Fund offers slightly better diversification across sectors and is more cost-effective, especially for long-term investors. When comparing their sector breakdowns, the Global Technology Fund is overwhelmingly invested in technology 67.41%, followed by smaller allocations to communication services and consumer cyclical 9.34%. The Blue Chip Growth Fund, by contrast, holds 45.92% in information technology with substantial allocations in consumer discretionary and healthcare. Another key difference is the minimum investment requirement. The Fidelity Global Technology Fund requires a minimum initial investment of £760 and £380 for additional investments, which may be a barrier for smaller investors. In contrast, the Blue Chip Growth Fund has no minimum investment, making it accessible to a wider range of investors. Both funds have strong performances, but they cater to different investor needs. If you are focused on the tech sector and are willing to take on higher fees for potentially higher rewards, then the Fidelity Global Technology Fund could be the right fit. On the other hand, if you want broader sector exposure, lower costs, and steady growth, the Fidelity Blue Chip Growth Fund offers a more diversified and cost-effective option. Ultimately, the Fidelity Global Technology Fund offers exceptional returns with a focus on the fast-growing tech industry but comes with higher fees. The Fidelity Blue Chip Growth Fund provides exposure to top-tier US companies with lower costs and more diversification, making it a great choice for long-term growth in various sectors. That's all for today.